Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. This content is brought to you by Uphold, which makes crypto investing easy. I've been using Uphold since 2017. You can buy, sell, trade, and earn cryptocurrencies on Uphold. You can also trade precious metals and as well as equities. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto, not your keys, not your coins. If you'd like to learn more about Uphold, please visit the link in the description. All right, my friends, before we get into the BNY Mellon news, I want to talk a bit about the markets because Bitcoin continues to move up strongly. It crossed over $21,000 again today, and we're still seeing green across the board. As discussed in yesterday's video, though, I want to give this some time. I'm cautiously optimistic because I don't know what's happening here. Is this a bear market rally, some sort of bull trap that will roll over to lower lows, or is this a start of the retracement for Bitcoin, a move up to $40,000? I hope it's the latter. I hope it's the move up to the $40,000, at which point I'll be taking profits on Bitcoin as well as altcoins, because the altcoins will pump with Bitcoin. If you look at the chart here for Bitcoin on the daily, the RSI is, a huge spike out of the zone that it was in, in the bear market zone, and it's in the bull market levels right now. But we know we're not in a bull market, we're in a bear market, and expect there to be a correction because Bitcoin is certainly overbought at this point. But when I say correction, I don't mean to lower lows, but a pullback to build support levels and continue to work its way up. But as stated, we're still very early in this process and we have to give it time to prove itself. Along the way of it pumping, though, shorts are getting wrecked, bears are getting wrecked, so a lot of shorts got liquidated. In addition, I love this chart shared here by Stock Money Lizards. They're great analysts. They put out some really great information, and they highlighted Bitcoin's parabolic move. Even though it's small, they said Bitcoin has reached its temporary buying climax after hitting the 4 bases of a parabolic run. Now retracement to higher levels is necessary to confirm this uptrend. So there you go. It has to prove itself. We have to give it time. And that's how I'm looking at it. I don't know which way it's going to go here. And I want to see if it's going to build the support levels and keep moving up. And look, we may see that retracement 2 months from now. It's hard to tell and the timing. So we just got to, watch it carefully and see where it goes. So there are people, though, who are saying that they think this is a bear market rally that will correct hard. Gareth Soloway, who's a frequent guest on this podcast, he tweeted out today, warning from someone who has seen 25 years trading bull/bear markets in stocks, commodities, and crypto. Bear market rallies make you believe a new bull market is here. FOMO of 30% Bitcoin run is insane. Note Tesla chart, multiple 30 to 50% bounces. Bitcoin hasn't taken FTX collapse out or FTX collapse high out as yet. So he gave an example with a Tesla chart. That doesn't mean he's right, but his thesis could certainly play out. There's a high probability his thesis could play out. Once again, I'm hoping it doesn't. I'm hoping it's the retracement, but I don't know at this point. I'm in a holding pattern. I'm looking at this and I'm looking to see what Bitcoin does to validate that it is a move upwards, or it could be, as Gareth was saying, a bear market rally that rolls over to lower lows. So we got to be careful here. Now, something I got to share with you guys, it's incredibly hilarious, and it just continues to show Jim Cramer is the ultimate bull and bear signal. You do the inverse, you do the opposite of what Jim Cramer says, right? That's why there's an inverse ETF. Remember, Jim Cramer has been on TV saying, I'm not going to touch crypto in a million years. He's been tweeting, now is your chance to get out of crypto, right? On January 9th, he tweeted out, good chance again to get out of crypto. Someone put the timestamp for that tweet on the Bitcoin parabolic chart here. And it's like as soon as he said that, Bitcoin started rallying. And of course, we find ourselves at where we're at today, Bitcoin at $21,000. So it's just time and time again, this guy, he's become a meme now. I mean, it's hilarious. Once again, I think the inverse ETF is just the most brilliant idea ever. You just do the opposite of what Jim Cramer says. And this is why I've said time and time again, don't take financial advice from Jim Cramer or finance media, mainstream media, right? Do your own research, guys. Study the charts, because Jim Cramer is not trying to help you make money. He, as some people would say, is exit liquidity for institutional investors. He is in the pocket of these institutional investors when they go on TV and set a narrative. But you don't want to follow that narrative. You want to look at what the charts are saying, what are the fundamentals saying, and so forth, right? This guy is hilarious. It's just the funniest thing ever. All right, let's move ahead, guys. Here's the big news I want to share with you all. It is very big and it's very bullish. BNY Mellon, America's oldest bank and the largest custodial bank in the world, they have $43 trillion of assets under custody. Their CEO made the statement yesterday, ignoring crypto would be like sticking with paper and not adopting a computer. And he's spot on here. And now remember, last year, BNY launched crypto custody, right? They launched in the bear market as the price was tumbling down, my friends. In October 2022, they released a press release talking about how they would support Bitcoin and Ethereum, and they are launching crypto custody. So this is a bank, once again, the America's oldest bank, has been around before crypto, but they recognize the disruption that's happening and they are jumping in. So let me give you the additional details of what Robin Vince, the CEO of BNY Mellon, had to say. Robin said on an earnings call today that digital assets are the bank's longest term play and acknowledged the world's oldest continuously operating bank has to adapt to technology changes. He said, here's a quote, "We're investing for a future that probably will come to be, but it may not. But if it does come to be, we have to be there," he said. "We do think it's important for us to participate in the broader digital asset space." The bank's chief compared ignoring the digital asset space to being the custodian of 50 years ago and sticking with paper and not adopting a computer. That's not going to be us. Big statements there, my friends. And this is kind of the blockbuster moment for a lot of these different stock exchanges, banks, and financial institutions. You either get on board and adopt, or you will die, right? Blockbuster did not get on the internet to make their movies and TV shows and all those things available, and Netflix came along, ate their lunch, right? Blockbuster gone, bankrupt. Disruption is happening. It's at their doorstep. So these banks and institutions and so forth are moving towards crypto, and those who don't will become irrelevant. They will go bankrupt, whatever it may be. So BNY Mellon is one of the several traditional institutional players entering the digital asset space. Fidelity opened retail crypto accounts in November before filing metaverse trademark applications last month. BlackRock launched a private Bitcoin trust last August, as well as a crypto and blockchain-linked ETF in Europe. They also partnered with Coinbase, as you all know, and even NASDAQ launched crypto custody last year. So these big players did it in the bear market as people were scared. The price is tumbling down. Retail is running the other way, right? So let me give you some more details here. BNY Mellon reported a 38% drop in profits during the fourth quarter to $509 million from $822 million a year ago. The bank plans to cut 3% of its staff, around 1,500 jobs, according to a Wall Street Journal report. Now, this has nothing to do with crypto. This is just overall macro economy, right? With the Fed and everything that's happening, everybody is cutting back. But last year, the bank received approval from the New York financial regulator to receive select customers' Bitcoin and Ether deposits. BNY Mellon is working with Fireblocks and Chainalysis as its two main partners on its custody push, while also leveraging other firms, including Blocktainment. So big news here, guys. And they actually give some more details. The bank also offers two digital asset platforms, the digital asset fund services, and the digital asset custody. Big news, big statements from the bank CEO. Once again, this is not some small fish here, my friends. This is a whale. This is America's oldest bank holding the most assets as a bank. Pretty amazing, right? And it's exciting. And game theory will play out here because having BNY Mellon, BlackRock, all these folks, taking a stake in the crypto market, expect other financial institutions, stock exchanges, banks, and so forth to move along because no one wants to get left behind. Once again, you got to adapt or die. That is how it works. Now, we got some statements from Larry Fink, who is the CEO of BlackRock. And once again, they're already positioned in the market. Bitcoin Spot Trust, ETF in Europe, and of course, their partnership with Coinbase. So Charles Gasparino, Fox Business, reported on this. He said, Larry Fink on crypto, the technology and the opportunities are real. We do need better connectivity, more regulations, more AML. I believe the purpose of crypto will play a big role in the modern world. But that being said, we have to make sure it's properly regulated. So if you have Larry Fink, calling for regulations and so forth, it's most likely that we're going to get it this year. We know the market needs it. We know Gary Gensler, the SEC, is a professional grade A clown. He has not provided the market with clarity. He's just been doing regulation by enforcement. And the guardrails need to be there. How can these companies use stable coins? The United States needs to act. And I think it's going to happen this year, once again, because big players are entering in. They're going to lobby. They're going to put pressure on members of Congress. Now, we had, speaking of Gary Gensler, by the way, we discussed in the podcast this week that they're suing Genesis and Gemini, which is totally asinine, given that both companies are trying to restore the funds over $900 million to users. Gary Gensler coming in and issuing fines does not help the retail investors to get their money back. And we had former SEC enforcement chief Lisa Braganza, who I had on the podcast and interviewed her a couple months ago. She was on CNBC talking about this, and even she is puzzled as to what the hell is the SEC doing. Apparently, they were investigating Gemini and Genesis for a long time, but they didn't do anything. It's only until this whole disaster that they're now coming in. And once again, they're not helping the situation. They're adding insult to injury. So she said the SEC has known about this product for a long time, yet it allowed it to continue. She said it's puzzling why they didn't come to a conclusion months ago. That's because Gary Gensler was keeping up with the Kardashians. He was too busy going after Kim Kardashian. That's essentially what's going on. So attorney Jeremy Hogan, he weighed in on her statements. He said former SEC enforcement chief Braganza is puzzled as to why the SEC knew about the Gemini lending program, but allowed it to continue for at least a year before telling it to stop. I wonder what she'd say about the 5 to 6 years the SEC allowed Ripple to sell XRP. So we've talked about this situation ad nauseum with the Ripple lawsuit, of course, and that for 6 to 7 years, they were letting Ripple do their thing. Even the, I forgot the name of the agency that Ripple settled with in the early days, and they paid a fine. Why didn't the SEC come in and say something, right? It's just unbelievable. And it's just because they're just, I'm not, you know what? I'm going to leave it at that. It's just been a mess. And they should be ashamed of themselves. They've gone far away from their core values, and hopefully, we get a resolution to this lawsuit this year, and the SEC takes a big fat L, a big loss in this lawsuit. Finally, y'all know I'm very bullish on Polygon and Matic, and we got a statement here from the co-founder of Polygon. He said, Polygon consistently clocking 500,000 daily active users, while DeFi and gaming consistently doing well. Brands and big tech onboarded last year, like Reddit, Instagram, Nike, Swoosh, are contributing to a large number of daily active users, just getting started. Guys, I think Polygon's going to do really well. Once again, this is a scaling solution, the layer 2 scaling solution for Ethereum. Big brands are building on it, and I'm really excited for this project. I'm not telling you to go invest in it. You should do your own research, but I'm sharing straight up facts with you guys. They're getting massive, massive partnerships, and super, super excited. And I've been buying the hell out of the dip for Matic. It's one of my, I think, top 5 coins for the next bull market. And just sharing with you guys what I'm looking at, what I'm doing, and you, as always, do your own research. All right, guys, let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.